Okay, so as I was saying, ETFs are the wave of future, and our student managed hedge funds are ETF based, and then you know how things moved. Like uh, it used to be, banks were regulated not to invest in anything that is risky. So uh, they used to take your loans, and that is their asset, make the loans to you, that is the asset, and then they take your money in deposit, that's their liability. And they were asking just getting spread. But then some of the banks were little jittery. They wanted to make more money. And then came the concept. So people were just, those who were, depositing, they were earning minimal interest rate. And so they were taking their money out. And at some point, you have heard about euro dollar and so forth. They took the money out of the country to get more return. I'm giving you the evolution of financial field. And then when that happened, so the local market responded with mutual fund. They said, okay, banks are unable to do that. So we'll do it. We will call ourselves mutual fund. And because we are non-bank bank. Why? A bank is supposedly accept deposit and make loans. So we are going to not do the full functioning bank, but we are going to take your money and create funds where even the small people can participate. So that's the birth of mutual fund. And then from thereafter, they say that limitation is now removed. They can basically invest in risky assets like stocks and bonds, the mutual funds. And then came the hedge funds. They were not satisfied with this. They say, why? Why do we have to go long? Why do we have to invest on the long side? Why does investment mean only long side? Why not short side? So you see that all the movements are towards liberation, right? We have to do it with in a way that is good for the consumers and also maximize their return. So came the hedge fund. That means you can go long, you can go short, you can go, different maturities and different kinds of activities, financial engineering in general. So the latest wave is now ETF. They say mutual funds, it's okay, but we'd like to make it more liberated. So then came this exchange traded funds, and the concept of common good or dignity of human beings, they are slowly and surely being put into practice. So let's say you want to form an ETF. So you say, I will form an ETF that is for those companies which are investing in home building for poor. So, I will get 100 companies, and I will get, meaning buy 100 companies share, put it in a fund and call that, just call it dignified ETF. So now, instead of investing in 100 companies, you just invest in one ETF, and that ETF will in turn invest in 100 companies. So you see that this opportunity, this liberated way to invest, that not just doing it in one company, is this concept of ETF. Moreover, because of the technology, we are asking that this ETF can be traded on the exchange. And that's why it's called, now the name is exchange traded funds. And further revolutions are coming in the way, but right now this is the latest. And so our in student managed hedge funds, we have very many ETFs we deal with, and two are those. One is EMB, another is EEM. Those are both emerging market products. And you can guess, and not guess, you can find out what are the components of EMB. That means EMB, ETF, invest in which companies. It is good to know when you are just getting it from ETF.com. that these are the companies they're investing in. Same thing for Josh. That is, you have to also know which companies this EEM ETF are investing in. So with that prologue, I would like to now come back to two different assignments that you have. One is an individual assignment. That means you have to look at this individually. So like Josh, you have to look at EM individually. You already have a PowerPoint in front of you. What you need to do is to basically edit that PowerPoint and make it current. And also give your flair too from what you understood from the class so far. And same goes with Nasif's EMB, needs to also update it and then give your flair or insights of what you have learned in your case, in the course. Any specific questions, let me know.
Professor, I was doing the report last night. One of the problems that I'm having with EMB is that if you can show me like a example, like how to do wind analysis on EMB or ETF, like any kind of ETF on the SXU page.
Okay, just give me a second. Okay, do you see the page?
Yes.
Okay, so let me take this one. Okay, these are the things that you can, what I call bells and whistles you can do to distinguish your presentation. And for your group, you can see different results. Anyway, just now, this is fundamental. This is the technical, and these are the bar charts. And even though I prefer all the graphs in one, remember you did a bar chart assignment one, you put everything in one, you had, and also in a particular order. Order is fast is the first one, the slow is the second one, ADX is the third one, and RSI is the last one. Do you remember bar chart homework one?
Yes.
Yeah. So I prefer that way. We just one slide will tell about the wind. And then, of course, you have to do the integration statement in the same slide. Okay, so that is what now you have to do for technical analysis. So you say, how do I get it? It's from bar chart. You do not have to go elsewhere. You cannot find anything on bar chart on EMB?
Not on EMB. Maybe I'm looking into the wrong one because it says if you go to the SXU bar chart, it talks about the ETF futures, but it doesn't say anything specific about EMB.
I know what you are not getting to. In bar chart, when you go to the bar chart, you go to the quote lookup, QUOTE, lookup. When you go to quote lookup, and then you type in EMB, and then it will give you something. Click on that, it will take you to EMB.
Oh, I see it. Okay.
That is the part that is missing. So let me see whether I can show you.
Yeah, it's under the tab. I was we were trying to find the same thing,
Yeah.
how to get the quote. So we try to click on ETF market, we try to click on futures market, funds market, and we weren't able to get anything. But yeah, if you click the quote lookup, and yeah, I think they gave it to you right away. So
So did you get it?
at least for me, I don't know about Nasif.
Okay. Nasif?
I'm trying to look right now, real quick, see if if I'm able to do it.
Okay. And so let me know. So that is what. And then the other major question, Nasif, let me know if you need to do so. The other thing, major hurdle that you'll face in here is to generate a basis curve. You see, I mean, that's why I say that these are the ultimate. It is a test of your understanding of the whole course. You have been taught to get to basis through bar chart. Basically, you go and write the spread, right? Spot minus futures.
Yes.
Now you have to find out what is the spot for EMB or EEM, and what is the futures for EMB and EEM. Now, what needs to happen is a little bit of your thinking on that fact. A futures has to qualify certain test. That is, if I am doing the futures for crude oil, it is so popular that it is given there, right? But if I'm thinking that what should be the futures, and I pick up for crude oil, I pick up, let's say, soybean futures, do you think this is appropriate?
No.
It is not. They're two different nature of class, right? Plus of assets. So futures and spot has to be related field, but not every asset has futures by CME Group. So what we do what we call proxy hedging or cross hedging. So that is why Treasury bond futures is most popular futures. Why? Because people who do not have futures, they take that futures as a proxy to their own asset. So as I was corresponding with you folks, I was telling you that for EMB and EEM, first of all, you know the nature of your asset. What is EMB? Is it a bond or an equity? Answer is obviously it's a bond, right?
Yes.
And for EEM, what is the asset? Is it equity or a bond?
It's equity.
Equity. So now you have to figure out, this is not only equity, but this is equity for emerging markets. So you can right away think about E-mini futures, but E-mini futures is basically for developed country equities, not emerging market equities, right? So you keep that as one of the futures in your short list. You go to ETF.com and see whether there is a direct futures for EEM, whether there is a direct futures for EMB. If you fail to do so, if there is not any direct futures for those assets, then you go to the proxy hedge. So for Nasif's case, it would be Treasury bond futures. And for your case, it will be E-mini futures. Are you with me? I mean, so far on this?
Yes.
Can you yeah.
Josh, I can barely hear you.
Oh, I'm sorry. Can you repeat the last part again about for mine? It's gonna be E-mini futures.
It immediately comes to your mind because that's the futures for equity.
Oh, okay.
Right?
Yeah.
But very standard futures for equity. But you said, no, hold on, I will keep this in my short list. I will go to ETF.com and see whether they can provide any direct futures for EEM. EEM is the spot. Now you're looking for futures to generate the basis, correct?
Yes, that's correct.
So you figure this out. If you fail to do so, only then you use E-mini futures as a proxy hedge for EEM.
Okay.
And same thing with Nassif. In his shortlist, it should be treasury bond futures. The nearby contract. Remember, always take the nearby contract. Okay? So you take the nearby contract for treasury bond futures and keep it in your shortlist. Go to ETF.com, see whether there is a direct futures. If there is no direct futures, you fall back onto this proxy hedge.
So if there is no direct future, if I cannot find any direct future on ETF.com, I do the basis curve on the treasury bond future?
Exactly. So what should be your formula?
F0 minus 0?
Yeah, but give me, what is your S sub 0?
I'm not clear on the...
What is your spot in this case?
The spot is going to be the EMB?
Correct, EMB. Then minus the nearby treasury bond futures. Can you get the treasury bond futures, the quote? It is right on the landing page.
Bond.
Landing page.
Just like crude oil was on the landing page, S&P 500 was on landing page, treasury bond should be also under the interest.
10, it's just 10-year T-note. Is that the treasury?
Yeah, treasury note, but there is nothing, a treasury bond.
I don't see a treasury bond. I see, actually I see it, T-bond. Yes.
And what is the symbol for that?
It's ZBU21.
Exactly. And Naseem, Josh,
Yes.
if you were to get to your short list, let's say you failed to get the direct one,
Right.
what is the proxy hedge you are going to use?
Is that the one that you told me that use the E-mini future?
Exactly, and it is on the landing page, isn't it?
Looking at it right now. Is it also on the futures market overview section?
Yeah, on the landing page. It should be one of the top ones.
I see it. It's on the first one, Josh, on future market overview.
Oh, is that the S&P mini? Yeah, I'm sorry. Yeah, I see it. ES, yeah.
Yes. What is the symbol?
ESM21.
Yes. One is ES and another is ZB. Yeah.
Yes.
And that you have to do. But then again, I would like you to search a little to find out the direct futures. And that's why, at the risk of repeating myself, I say, this is something where rubber meets the road. When you go and in real life, you're doing investment management as well as portfolio management, you are to do some analysis and say, what is my spot? What is my futures? How do I get my direct futures? My first effort should be to get the direct futures. But if I cannot find direct futures, then my second route is to find out the one that is proxy, they related to it. Many people do that. That's why treasury bond futures is so popular. People do not get direct futures. So that's the. So I would like you to invest not a lot of time, but just build a track in your mental thought that I have my first effort to find out the direct futures. If I fail to do so, then I go to my reserve, which is proxy hedge.
Professor, talking about the spot price, in my case, it's gonna be EMB, right? However, I looked under the code. I could not find anything on EMB. Maybe I'm missing something.
Quote lookup, there is no EMB?
So I went to the ETF detail. Let me see. Yeah, I went to the ETF detail, and then it's under code. It says S&P 500 SP.
No. Go to quote lookup. On the left-hand side, there are menu. And in there is an independent icon. Or
It's a seventh. Yeah, it's a seventh one from the list, Nassif.
Okay.
From the market overview, it's a seventh one.
Oh, I see it. I see it. So it's then I just search EMB.
Yeah, just write EMB.
Okay, and it talks about emerging market bond shares. Yes.
And I think you can click on it, and it will immediately take you to the chart, to the familiar interface where you have to choose the chart.
Got it. Yeah, I see it. I see it.
Yeah.
About identifying the market as I think I emailed you about the normal backwardation or normal contango. So like our fundamental analysis, it tells us like if we're expecting the expected price EST to rise or be lower. But what about the short and long hedge?
Okay. This one, you cannot get it under, normal backwardation and normal contango. Let me ask you this question. I can ask it on your final too. Is it on EMB, EM, or is it on the EMB features and EM features?
I mean, EMB is the spot. And based on what you told me, we cannot have it on spot.
So it is always on the futures, right?
Yes.
So once you decide on the futures, let's say that you fail to get the direct futures, so you go to the treasury bond futures, and you go to the commitment of traders, and there you'll get the short and long quantities. Make sense?
Yes.
Yeah. Josh, do you see the point? That is your normal backwardation and contango.
Yeah, I mean, yeah, I think I haven't done the bar chart yet. So once I do able to pull that up and everything, I think I should be able to answer that question.
Okay. Yeah. So for your case, let's say again you fail to get the direct features for EM. You find out
From S&P 500 and
E-mini futures it's readily available in commitment of traders, and then you find out who dominates.
Okay.
Anything?
So one more question about the basis chart. I will look for the direct future for EMB, but when I cannot find it, and you said that I should do then I should do the closest one, which is the treasury bond basis chart. So in that one, when I'm doing if I cannot find it and I'm doing the basis chart on the basis curve on the treasury bond, in that case I just do it on treasury bond, like nothing related to EMB, just basically do a basis curve.
You look at I was answering the normal, the quantity of hedges. You do it only on treasury bonds. But when it comes to the basis, you are taking the spot into consideration. Remember, spot minus futures is the basis. So that through the basis, you are engaging both the spot market and the futures market. Makes sense? I mean, for the
I think I'm just getting confused on the spot. So like as an example, if I'm doing the spread right on the basis chart, so I'm using the future for the treasury bond, right? So GSN, but what about the spot? You're saying that I'm using EMB, right?
Correct. So EMB minus ZB, whatever you said, ZBU 21 or something.
Okay, so EMB minus that. Okay.
Yeah. So now you are getting the complete picture. In so far, you have been only talking about EMB only. Now you are taking the no. I am going to look for the information from EMB plus I'm looking for information for its features. The two markets are giving you data. The spot market and futures market.
And one last question, Professor. I know it's I'm going a little bit ahead of myself. For the next week, you said that we have to combine these two reports.
Okay. Then you are talking about the group presentation. So first you submit the thing for the individual one, both of you. I need two of you, one for EMB, one for EM. Then after this is done and I give the comments, if there is something that I would like you to acknowledge that you failed to mention this or you failed to mention that, or you interpreted it in the wrong way, then you go and combine the two. In a combination, again, the concept I would like to bring to bear is that, whenever you are doing the investment management, you are talking about assets, right? You are EMD asset manager, Nasif, and Josh is EM asset manager. Okay? Be in real life. Each one of you are assigned an asset, different asset. Okay? Now, it is a portfolio manager who will put, once it pass master, that means, yes, these assets will be invested in. Then he puts or she puts them together as a portfolio. Now, in an EMB or in EM, you might suggest hedging. Let's say I'm just giving a hypothetical scenario. You might suggest hedging. But when you look into the group and put it in the portfolio, that means you put it in the bar chart. And in bar chart, you'll put as EMB plus EEM. That means you are putting two assets together and see how the graph, the resultant graph looks like. suppose the graph is upward sloping, then you know together you are value augmenting portfolio, right? If it is flat, that means you both of it is actually hedging, perfectly hedging each other. It's a flat, no fluctuations. For the first case, it is fluctuating upward. So you say that, well, as a portfolio, it is behaving real as risk-adjusted return. Or a flat one, you say that, well, it is almost like risk-free. You have created a portfolio that is almost like risk-free. And then if it is downward sloping, only you see that together they are destroying the value. So the only thing different from your individual asset presentation is adding 2 or 3 slides to it at the end that as a portfolio, how they behave. So if it is upward sloping, you say that, well, individually we recommended hedging. Now that we see that, well, as a portfolio, they have synergy, I do not need those hedging asset anymore. I will have just EMB and EM. If it is destroying at that point in time, then you see, as a whole, you need a hedge. As a whole, not as individual asset. And then suggest something that you can think of. Make sense? This is the real world. That's the way it works. And asset management is the most challenging, most rewarding career there is. And then you go to the portfolio. There you have to, a portfolio, if I liken this, I mean, as an analogy, a portfolio manager is a chef. Do you see where I'm going by giving the analogy of a chef? Does the chef create the individual ingredients?
No.
So he has the ingredients in front of him. It was given through some processes. Then he mixes and matches to find out. So if you would like, if his objective is to find out highly palatable dish, then it will be high risk, high palatable portfolio. If okay, that is not so palatable, not so risky, then it's a balanced portfolio. If it is very bland and low risk, then he puts a bland portfolio. So portfolio manager has his objective. Just like a chef, he creates. Makes sense? I mean, do you see the analogy between the portfolio manager?
Yes, yeah.
So just give 2 or 3 slides in which one of the slides, the key slide, is the graph of, EMB plus EEM.
I think that's all. I think that's all the questions we have, I think. as of right now.
Yeah, as usual, you can have email. Uh, I have a questions for you. Let's say, this pandemic uh, has introduced different pedagogy to the whole system in the world, education system in the world. I mean, we have been forced in March of 2020 to go online in a hurry. I mean, even though some people did not or were not ready, their skill set was not there yet, but they had to go in a hurry. And so when we go to face, one of the things that I will be doing is obviously that thing that I have done or invested in technology will continue to make this available, even though I'll be meeting face to face, but that will be available. I'll have flip classes. But I was thinking also making office hour. I will allocate a time and making office hour on Zoom because I have more advantage on that than rather than on the face to face. What do you think now that you experienced it yourself and the recording is available for somebody who could not make it to the office hour? What do you think?
For me, I do prefer the Zoom because again, I have the recording that I can watch later and then refer back if I have any questions or if I missed anything on my notes. So I absolutely prefer the Zoom office hour.
Thank you, Nasif. What do you think, Josh?
I think I also agree. It's just that it's much convenient and it makes more comfortable for I think for a student to like approach you like in an office hour, like rather than I don't know how many students actually go to your office or have a time to sit
That's
down
a
and
good
meet.
question. I mean, I sit there, I idle for a long time, and then once in a while, you know, uh, office hours are visited by two ends of the spectrum. I mean, people who are doing really exceptionally well and would like to go much deeper into it, that kind of people, and then people who are absolutely lost. It is the right in the middle, they never visit the office hour. However, even though they do not visit for one reason or the other, that they have other things to do. And so for people are rational, right? We assume that. And and then I was thinking that if I do this, even only one person shows up in Zoom, that's out of 20 people. That is usually the case if I'm lucky. And then on that basis, I get this done and put it up. The people who did not visit me, don't you think they will appreciate that video?
I think it, like you said, I think it's case by case. If students are doing exceptionally well, I don't think they will have time to look over your video. However, like if like for me, since I missed it last week, it was very helpful for me to go over the video that you went over with Nasif during your office hours. So at least for me, it was very helpful.
Hmm.
But I wouldn't say for every student though.
Yeah, okay. But this is if you compare face to face, but by Zoom, obviously, both of you think that, well, for one way or the other, uh, Zoom office hour is in the plus territory, or comparatively plus territory.
Yeah, 1,000 times much. Yeah, I would say. By the Zoom is like yeah, a lot more convenient and helpful than face-to-face office hour.
Thank you for your inputs because that is what I'm planning to do because in the fall I'm planning and I will say it will be Zoom and it will be recorded and so, but please look for it.
Right. And I think it's more approachable too. Like it's more convenient and it's kind of easy for me to like go on computer and just ask you a question rather than physically going to your office to make time to travel, things like that. So
And also nowadays, you know, uh, our student body is not rich student body, rich in the sense of wealth. And so not everybody will have requisite technology. But since everybody was basically flushed into this, and the university helped them get technology, I think they are now. I mean, had it been just without anything in face to face, no pandemic, and then I said it will be in the Zoom, then it will be kind of awkward for them. Right now, they are all familiar with it. So that is the point that I have to also address. If somebody does not have any computer or even a smartphone, then I will say that, well, if you're not equipped to join, then by all means visit me. Thank you for your input, sir. I mean, you are the best case so that I can test this out. Yeah.
Thank you, Professor.
Yeah. Thank you. Nasib, did you have any question or?
No, that's it. Thank you so much.
Thank you, both of you.
thank you, Professor.